A stock that closes down about 3% and then surges about 140% after hours is not delivering certainty. It is forcing investors to decide whether they are seeing a true fundamental repricing or a microcap liquidity event masquerading as one. PLRZ Polyrizon Ltd finished the regular session around $710, down about $0.25. The regular day looked contained, opened near 645, a range roughly 6.10 to 715, and a prior close around 735. Then after hours, prints appeared around $17, up roughly $10, close to a 140% spike. In microcap biotech, that kind of discontinuity triggers a familiar dread. The move might be real, but the late buyers often become liquidity for earlier, faster hands. Polyrizon is headquartered in Ra'anana, Israel, incorporated in 2005, and small enough that profiles list about 6 employees. Its market cap sits around $14 million, with about 2 million shares outstanding, and its financials read like a development stage biotech, negative earnings and minimal trailing revenue. Those details define the stock's physics. A company that is not self-funding depends on capital access. That means Nasdaq listing status, financing cycles, and dilution risk are part of the fundamental story. The company's technology thesis centers on intranasal hydrogels nasal spray designed to form a physical film on the nasal mucosa. Polyrizon frames capture and contain as a barrier against allergen particulates and viruses, and trap and target as a platform for intranasal delivery of active pharmaceutical ingredients. The hinge metric is mucoadhesion, how strongly and how long a formulation adheres to mucosal tissue. This matters because mucociliary clearance actively removes foreign material from the nose. Many intranasal products underperform in real-world settings because delivery is variable, drainage, uneven coverage, rapid clearance, and inconsistent user technique. Higher mucoadhesion can theoretically reduce that variability and maintain coverage longer. But it becomes investable only if later work shows it translates into validated performance, pharmacokinetics, dose consistency, safety, and clinical outcomes. The after-hours catalyst is dated December 3, 2025. Polyrizon reported positive mucoadhesion results for an intranasal naloxone hydrogel compared to a marketed intranasal naloxone product, suggesting superior mucoadhesion may translate into more reliable opioid overdose reversal in real-world emergencies. Naloxone is a rescue use intervention, so the narrative is instantly compelling. Reliability matters when seconds matter. Yet this is still proxy, mechanism-relevant evidence rather than an outcomes endpoint. In biotech, the normal credibility ladder is staged. Characterization data, then safety and tolerability, then regulatory alignment, then human data with endpoints. Proxy-driven repricings can be legitimate early signals, but they are fragile if follow-through milestones do not rapidly convert may translate into measured outcomes. This story was reinforced one day earlier, on December 2, 2025, when Polyrizon announced completion of a key manufacturing upscaling milestone for its nasal spray platform. Upscaling is a real gate because lab success often fails at scale. The normal failure modes include stability problems, viscosity shifts that change spray behavior, packaging compatibility, sterility and quality control challenges, and batch-to-batch variability that invalidates earlier results. Upscaling suggests repeatability and readiness to produce clinical trial material, an execution signal. Taken together, December 2nd plus December 3 is a coherent corporate message. We can produce at scale, and the core property compares well against something already marketed. So why does the move still feel mysterious in a fundamentals-linked way? Because the equity's structural history can warp price discovery, especially in thin after-hours trading. On April 11, 2025, Polyrizon disclosed it received a Nasdaq notice dated April 8, 2025 for non-compliance with the minimum bid price requirement under Nasdaq Listing Rule Fee 550, a 2. Typically, the normal path after such a notice is either organic recovery, sustained demand lifts and holds price, or a mechanical fix, often a reverse stock split to raise nominal price and tech listing status. On March 31, 2025, the company announced a private placement on $17 million. That is normal runway financing for development stage biotech, but it also trains investors to expect dilution and possible warrant overhang, making spikes feel like liquidity events rather than durable repricings. On August 14, 2025, the company announced it had regained compliance. Then, on November 28, 2025, Nasdaq Corporate Actions Communications indicated a 1-for-6 reverse stock split effective that date with a CUSIP change. Reverse splits do not improve science, but they can thin liquidity, shift the shareholder base, and produce inconsistent historical chart adjustments across data vendors. That inconsistency is why odd stats, like a displayed 52-week range reaching around $7,200, matter even if they are artifacts. In large liquid stocks, discrepancies are washed out by continuous trading and arbitrage. In microcaps, artifacts can persist and distort risk perception. Traders set levels from chart history, investors estimate risk from volatility context. If that context is unreliable, markets become more reflexive and headline-driven, increasing the odds of abnormal after-hours cascades. Proxy evidence plus structural fragility is the core of this mystery. A disciplined investor should hold 3 hypotheses in parallel. Fundamental repricing, manufacturing scale-up plus improved mucoadhesion versus a marketed naloxone product increases the probability the platform is credible and partnerable. Structural amplification, thin after-hours depth and post-corporate action fragility magnified a buying cascade. Narrative premium, naloxone's urgency draws attention and creates a premium that only persists if later milestones convert may translate into validated performance and clinical evidence. For practical discipline, use the regular session map. The day's high around 7.15 is the first prove-it line. Durable repricings typically reclaim and hold above prior highs in regular hours, then consolidate. The 7.00 area is a psychological pivot. The day's low around 6:10 is the nearest clean invalidation zone for a short-term bullish thesis tied to the December catalysts. The after-hours print around 17 is a reference for potential supply on a retest, not a promise, unless the stock builds a base and holds higher support during regular session liquidity. The uncomfortable but useful conclusion is this: Polyrizon's narrative improved incrementally, manufacturing execution progress and mechanism-relevant mucoadhesion evidence are meaningful, but the stock remains dominated in the short run by microcap structure. Development stage cash needs, minimum bid compliance stress disclosed April 11, 2025, a roughly $17 million financing announced March 31, 2025, compliance regained announced August 14, 2025, and a reverse split effective November 28, 2025. In that environment, after-hours conviction can appear long before proof arrives. Short-term, treat PLRZ as volatility, require regular session confirmation above roughly 7.115, watch defense of about 7 and define risk against roughly 6-10. Medium-term, demand follow-through milestones linking mucoadhesion and scale up to regulatory clarity and clinical execution. Long-term, the only durable thesis is platform validation strong enough to attract partnerships for commercialization without repeated dilution eroding shareholder value. Regular hours whispered doubt. After hours shouted belief. The mystery is which voice survives when liquidity returns and harder evidence arrives. Before we wrap, the Why+Strategy channel is waiting for your tips. If there is a public stock, a private company you think is quietly building toward a listing or an upcoming listing candidate, and if there is a coin project you want us to dig into with the same skeptical investor lens, drop the name in the comments. Be specific about what you saw, what felt off, and what you want verified. And to the listeners who keep this project alive by watching through, subscribing, hitting like, leaving thoughtful comments, and sharing the episode outside this platform, thank you. We will keep earning that trust by coming back with sharper research and better stories. This was Why+Strategy.